Per usual, everyone, this channel is for educational purposes only and is not intended as financial advice. It is Monday. Let's take a look at some macro data. Did a lot of legacy charts last night. Do a quick overview for this video, but it certainly feels bad when legacy is pushing all-time highs day after day after day, and we're just floundering and squandering and doing a bunch of nothing. But it is September, so that's really where my head's at. A few days ago, if not a couple weeks ago, drew out this potential schematic for BTC. Maybe we see the inverted head and shoulders here, maybe we don't. Ultimately, it's going to be pretty clean if we do get continuation in October, because for me, the full go long signal is going to be bullish TK recross price above cloud. It's going to be anything over this potentially diagonal neckline, horizontal neckline, 117 to 120, and then 122 plus is blue sky territory. Obviously, it measures just this mini head and shoulders measures to 130s, 140s. So that would be the first area where I'd expect some resistance if in fact this is real and survives and pans out, I guess, as expected. But it's going to take some time. It's going to take another couple weeks potentially, and then maybe even a week into October. So I would sit tight, and that's if this is right. Assuming the cycle continues, which I'm fully in that camp, that we'll get another good couple weeks in us here in Q4. ETH, on the other hand, ETH might bleed into like end of November, December, January, as we typically see, where alts do best at the end of the cycle after BTC. I mean, that's just what we've seen, right? I think this is probably going to need all of October to consolidate. This head and shoulders doesn't really measure anywhere that matters, but it's just a matter of, what is the next setup here? It's going to be a bullish TK recross. That's going to take weeks because it hasn't even crossed bearish yet. It probably will cross bearish. You can see it broke that pivot there. Next pivot down is 3160. I just don't think there's a trade or a setup or anything to do here. There really hasn't been in a long time on ETH after the moves. And this is where people always get into trouble. They miss the move. They miss the initial move. They miss the secondary move, the tertiary move, the quaternary move, whatever. And then they just think, oh man, it's going to keep going. It's got to keep going. It's got to go to 8. It's got to go to 8, right? And then they get washed out for whatever reason. So to me, it just looks like a nothing burger there. Sol pulled back. I said 205. It's where I like last night. That hasn't changed. You can see the Kijun there at 205. And again, is there a setup here? Not really. Just nothing to do, in my opinion. Buy the Kijun and wait. That's really all there is to it. I don't really see much else to do on the Sol front. And the rest of the alts got taken out to the woodshed today, down 5% to 10% or more. And hey, that's just par for the course. This is September. Remember it if it's your first. Don't forget it for next year. Looking at crypto flows weekly from CoinShares, we've got almost 2 billion in globally last week. That's after over 3 billion the week before. We had some spotty weeks back and forth, but there's clearly a lot of people selling still, because if we had inflows that were just net inflows broadly, then price would be higher than it is relative today, but it's not. So on top of this, we clearly have people selling. That is the obvious and easy explanation. On the macro side, the schedule this week, we've got some Fed speak here and there. Fed speak. Bunch of that was today. We've got PMI tomorrow. Another GDP estimate Thursday. I thought JPOW was speaking at some point. Okay, there he is tomorrow at 12:35 Eastern. And then PCE is the big one at the end of the week. That at this point may or may not matter because we've already got most of the inflation components baked into the system. The market seems to believe we will get another 25 cut in October, over a month from now. Not sure how bad or good the data would need to look for this attitude to change. Ultimately, what could change this is either a combination of Fed speak or data, and then sort of a last minute Fed whisper to Nick Timiraos at the Wall Street Journal in the blackout period where the Fed isn't saying anything. If the Fed ever sees the market way off base on expectations, they will do that. They will whisper it to a reporter, and the reporter will say, hey, market, you're wrong, basically. So this is probably where we're headed, kind of irrespective of data, at least next month. As far as December, not sure. And of course, no meeting in November. What's also interesting here is we have just a huge distribution of expectations in 26 and 27 after Powell leaves. It kind of tells me that nobody really has any clue, nor should they, right? This is so far out at this point, but the market is just set right in the middle relative to the distribution and has no clue one way or the other. Looking at Trueflation, it has ticked up a little bit. It's sort of just all over the place, still pretty noisy. It isn't necessarily trending. It just kind of goes back and forth. I assume this has to do with the tariff data working its way into the ecosystem, and you're getting frequent price changes based on the data that's tracked. That's my read. But not as hot as perhaps the estimates are showing. We are 22 days into September now. That's a 3% on CPI. Last read was 2.9, so it is increasing, and it is going away from the Fed's target. Core we will get later on, PCEs this week, but even core is not headed in the right direction. PCE, wrong direction. And yeah, it's tough because if you're the Fed, what do you do? Do you care about labor more? Do you care about the inflation data more? And then what do you use to justify your actions, right? Like, you could probably go either way here. You could say, well, the jobs market isn't that bad yet, and inflation isn't at our target. Or you could say the jobs market is getting bad quickly and we need to act, which is basically what they've said, despite being away from their inflation mandate. Energy prices basically held steady the entire year so far, and that has certainly helped the inflation data. So far, so good on that front. Fertilizer data also rising. This works its way into food costs, obviously. Not something you want to see on the inflation front. And used cars also basically flat the entire year. So that's good for the inflation data. GDP continues to hold at above 3%. No issues there. And a reverse repo running on fumes here, sub 15 billion. So we certainly have a liquidity crunch brewing. You're not seeing that on the S&P, the Qs, the Mag 7, but it certainly feels like we're seeing it on the crypto side. You know, the liquidity appears to have run out in the moment, and maybe it's going to require intervention by the Fed. Maybe it's going to require rates coming down more. Maybe it's going to require the TGA reaching a point of satisfaction. 850 allegedly is the level where they say, okay, we're good at sucking liquidity out of the ecosystem. So we're getting close, but man, is it absurd post-COVID, the amount of money that swings around in the TGA. Just absolutely wild. Charts-wise, gold continues to look very, very good. It's at all-time highs, continues to push all-time highs. Didn't even want to print out a inverted head and shoulders here. It's at the yearly pivot, which I tried to put on most of these charts today, just to give a ladder climbing idea here, because if it breaks 37.50, the next target's 42.35. Now, I don't think there's necessarily a TA justification for that yet, but where else do you look, right? Where else do you look beyond here? You're at all-time highs. So that's the next level, the R4 yearly pivot at 42.35. Certainly looks very strong here. I don't think there's a bear div yet. It is pretty far away from moving averages, but this is part of the melt up, part of the crack up boom. And you're kind of seeing it across the board on anything that isn't crypto. This is GDX, complete parabola, almost reaching the R4 there at 80. That would be the next level I'd watch on that. GDXJ juniors, 104 is the level, completely parabolic as well. I saw this idea on Twitter kind of saying that we haven't gotten to the end yet because juniors is still not pulling away from the established mining companies. You know, that's when you get true euphoria, when you're getting crazy speculation, and the juniors was the argument. So maybe something else to watch on the gold front. When this ratio gets closer to 1.5, maybe that would signal we are near the end of the gold move, just because of the euphoria involved. And here's GDX against GLD at multi-year highs, continues to push. Where does this go? Does this go to 0.3? Does it go? I don't think it goes up to 0.4, but maybe, again, something else to watch if you're trading gold in the miners as far as trying to make a decision on when to start trimming, because parabolas are famously hard to trade. Another thing you can do here is just draw a line, and say, okay, if it breaks that line, then that's a good time. That's a good trailing stop loss, just based on the parabola itself. Here's Bitcoin miners against Bitcoin, also just completely taking off since earlier in the year. A lot of this is IREN driven, absolutely. But if you pit these individually against Bitcoin, most of them look like this. They're reclaiming a lot of the ground that they lost coming into 2025 on a relative value basis. Look at the bond complex collectively. Things look okay. This is the 3-day. It's bonds, and they're not going to move quickly. TLT still looks the worst, hands down to me. Anything but TLT is where it's at. And I think most people at this point are taking gold a little bit more seriously. As far as equities are concerned, here's SPY. What is there to say? Hasn't really held below the Tenkin for any period of time and just continues after this inverted head and shoulders, after the cup and handle. Yearly pivot there at 696. So how do you trade this? You probably just DCA and pray, right? I don't know. DCA and do nothing. Q's 625 would be the level, but this is clearly hastening in its speed. Doesn't mean it necessarily is the end, but it continues to just go up no matter what. And here you had a head and shoulders here that got negated, and it certainly looks like that's headed higher. Here's IWM. If it can break all-time highs at 250-ish, 275 is a decent level. And none of these look bad. And you'll notice none of these look like crypto charts. None of these look like Bitcoin. None of these are really super volatile. They've just been kind of riding the rails higher week after week. DJI also looks good for people who don't like the concentration in SPY and the Qs. That's a new all-time high today again for DJI. RSP looking a little less bullish, but still sitting there at all-time highs. This is equal weighted. S&P 207 would be the next level. So all these indices collectively look very, very good. You have SMH continuing to explode higher despite this head and shoulders that it tried to draw and break down from. NVIDIA has continued to turn up. So what is there to be bearish about? The most bullish thing here is that everybody is still bearish based on positioning data for COT and equities. I think it's record bearishness. People are just so bearish up here. Still, not quite what it looks like for BTC and ETH, but this looks very good for SMH. It's just, what do you do here? Anything? Do you trade the holdings, which is probably where I would be individually looking for trades and setups relative to the index. Here's NVIDIA, almost back to all-time highs again. Didn't quite get the bearish TK cross and certainly didn't get that edge to edge. So this to me is really good news for crypto, because if gold is higher, all the equity indices are higher, and all of the bigger components continue to make all-time highs, eventually that liquidity should roll into BTC. It should roll into anything with a product facing public markets. Here's MAG 7 ETF. I mean, what does it say? 75, new level. Looks good. Looks good for higher. Here's bots, another one I mentioned last night. You got both a cup and handle. You got a megaphone. Looks very good. Fresh breakout today. And this is pretty far down the risk spectrum. One thing I didn't look at was biotech. It's probably another area to look at. Home builders, maybe energy, just to see what you can see if there's anything on an individual basis that's setting up or looks better than the SPY or the Qs. But I think you're plenty happy just taking your whatever percentage per day and saying thank you, may have another over and over again. Here's Tesla, reached its first target today, 441. Still like it for a little higher, but it is pretty extended here. Let's be real. Catching this down here at 320, such as myself and many others, very thankful for this 20+% move. Still holding on my end for now, but likely to be trimming and cutting throughout the week. And then lastly, Rivian having quite a day, making a new higher high on the 3-day candles. So this is the, what is this, 1, 2, 3, 4, 5th candle where it's made a higher high after some resistance at 14-ish. And this is how you want to start to see things. Nothing looks particularly outlandish here. It just made a higher high for the first time in a long time. Does this hold? I don't know. It's got some days on it to close, but this is where you want BTC. Just let's get back above the cloud. Let's see what we can see at 117. See if we can get some momentum. See if we can get some momentum here at 15. So again, I'll reiterate, unfortunately for us in the crypto side, not really much to do. And there's plenty to do in legacy land. That's all I have for this one. You may like, dislike, comment, share, subscribe, and happy trading.